Hello and welcome to today's FTSE analysis. I'm just going to have a quick overview of what I'm looking at. We can see here on the daily chart for the FTSE, the market is sitting outside of this Bollinger Band. It's opening up near the highs. There's obviously been a lot of buying coming in overnight in the overnight market. We're sitting on the R2. Now this is the overview on a longer term chart. We'll have a look at the weekly. Nothing too special there, but we are kind of at the highs of this channel sort of an area. Have a look at the monthly. We're sitting close to the highs on the monthly. Fourth candle on the upper Bollinger Band. If history is anything to go by, often the market won't stay at the higher deviation for too long. I'm just going to drop down to, say, the 4 hour. If we come up and hit the R2 here, we'll be getting awfully close to the upper Bollinger Band on a 4 hour, which is a good indication that we may turn around like this experience here, or this kind of experience here. It did take some time to actually get that momentum down. What we do have is a high and a close gap, so we closed very close to the highs yesterday, and I would expect the market to come down and fill this, but I would be concerned about a push up to perhaps the R2. If we continue beyond the R2 up to the R3 and beyond, I'd be very concerned holding a position from this point and beyond that. So if we get a spike, I would be tempted to look for a short position. However, I am wary that the market is sort of hyper fueled at the moment and it's just really strong. So while you don't want to get in the way of a speeding train that's just going north, it could be a very good opportunity to get short if we do start heading towards this extreme gap, which is the high level here at 8289 and then the close. So I'd be looking for an impulsive move up that kind of soaks up a whole heap of orders and perhaps some stops, and then hopefully come down. If we do come down straight away, I'm just going to have a look at how many points is in that. It's only about 28-30 points. So for the risk of, say, maybe 50 points, it may not be worth getting into this trade, but that's the lay of the land. If we don't push up first and we do come straight down, there is a move there, but it is risky because there could be some more further upside. And having a look at the 30-minute chart, we'd really want to see a nice strong impulsive move at the open, start to see a bit of a wick off this R2 and then bring us down all the way down to this high. Always remembering that even though when markets are super high and they're very inflated, they can still continue to go up. So always keep that in mind. Be careful because the market doesn't always respect what it should do.